And welcome back. Sorry about the little bit of a delay here. Getting up and running. Got my second dose of the vaccine yesterday. Not sick or anything. Boy, oh boy, am I tired. Didn't really expect that. But nonetheless, we have a market to talk about, so let's get into it. First and foremost, we're going to talk about the ES as always. What a recovery yesterday, right? That 50 moving average just seems to be, a trampoline of nature. So the move happened yesterday. We talked about yesterday is this being the highest, odds play for them to go to fill the gap. From here, we'll get to decide and get to see what really is going to take place with this market. Are they going to continue higher? If they do, obviously these 2 days highs, just above the 43.60 area should be the target. If they're going to pause here, if you're going to get some sort of balance day, which isn't out of the question either, I think probably holds higher odds than continuing some crazy rally. But keep in mind exactly what happened last time they had any kind of significant pullback into the 50, right? They liquidated into the 50, huge short covering rally the day after hitting the 50. Next day went full trend to the upside. So don't be shocked if that pattern continues. Now, the only difference I see is, boy, oh boy, did they get carried away yesterday, right? That was quite the rally. It was pretty impressive in nature. I think even if I wanted to get long again in this market and not chase this higher and higher, I think what I'm looking for is a reattempt of this low here. So somewhere just below 42.80 on the daytime frame, I think would be a great opportunity to get long once again. So if they can possibly pull that in, maybe fill in some of this terrible structure we left from yesterday and get towards that 42.80, I think that's a good opportunity to get long for the continuation higher. Also, I wouldn't be shocked, if this was the rally, and I talked about this yesterday, and I'll get into it more once I start talking about R2I9Q. But the potential is there for this to be the relief and then a continuation of selling, right? There's a lot of garbage below us that needs to be taken back. The only issue and only concern with that I have is, one, there's no catalyst really out there to cause that. And two, you're coming right into earnings season where, maybe some poor earnings cause it. I don't think so, though. But, generally the markets rally into tech earnings. So it's something, although I think it is possible, I would think the highest odds for today, would probably favor a balanced day, potentially pushing somewhere towards that 42.80 area. To see what kind of buyer we want to invite into the market. So on the daytime frame, that's kind of where I'm at with the ES. Now, when I'm taking a look at my profiles, now keep in mind this level here wasn't here yesterday. Okay, this is below. So this is a previously 07 level. I've moved this up now. Reason for that is I think this is becoming a bit of a swing location. I'll probably actually change this into a box as I continue to migrate and upgrade my support resistance zones of supply and demand. So, yesterday was a pretty clear short covering rally, right? Starts early in A, super aggressive, B, super aggressive, C, super aggressive, D is the pause period where everybody starts to pile in short thinking, okay, we're going to get the reversal. And then they get, they're just the fuel. So here's a very important piece of information if you're going to use the profile in any sort. One, if you see a move like this take place, this is not strong buying. This is a lot of Momo mixed in with short covering, right? You have a lot of shorts down here that got themselves in bad positions, shorting against the 50, shorting below the 21. Next thing you know, they start to get squeezed out. You get Momo jumping on board, and boom, right? So what happens is you get these pause periods here in D where some smart money will start to exit the market. And what it does is it invites Momo buyers into the market against, Momo sellers. And we know this, from time and time again, Momo selling is not better than Momo buying. Never will be, never has been. It is what it is. So when you get these pause periods, it's very important not to just fall in love with shorting the market. Whenever you get a day like this, I think it's far more attractive to look for pullbacks to get long. I think anybody would tell you that. This looks like a trend day. It's obviously a short covering rally, but goes trend on the daytime frame. So as far as, looking at this, if you're fading this market in D period, you're just adding fuel to the next move, especially when you're that close to filling the gap. So just a little bit of information there. Now, I did take a fade on this market in G period. I did it way too early, though. I ended up taking my stop right before it broke in H and I. Funny, right? But that happens. Now, Here's another indicative thing about P-shaped profiles, okay? When you get a true P-shaped profile, and I mentioned this, in my room, I had said this, prior to any of this taking place. I said, if this market is to build a P-shaped profile, you will get the pullback, you will make a new high, and you will liquidate late in the market. Doesn't have to be an M period, could be an L period and M period. That is how P-shapes are built. That's how they're, getting out of their positions. They need to buy the market back up as they're getting out of their shorts, and then the market will sell back off late in the market. So that happened. Is this showing strength in the market? Absolutely not. It showed a lot of weakness, actually, very poor volume, very, very, very poor structure. But time and time again, we see this happen off the 50-day moving average. So as we're watching the GlobeX session here, they got a little carried away once again, tried to look above the 29.32 level, and they've broken back below. We obviously stopped right there yesterday in our real-time hours. So that would be the resistance for today. Now, it sets up really well because what this gives you is it gives you good resistance with a guaranteed out, right? If you break above the GlobeX high, whether it's, in the next 2 hours here before GlobeX closes, or, early in the pit hours, that is an opportunity to get short if the DOM tells you to, if the tape tells you to enter into the market. You can get yourself short. You can put your stop rate above the GlobeX high, and you can just, target first and foremost kind of where we're heading right now in GlobeX, which would be just below the 14 level. If that 14 level goes, GlobeX low, the single prints, so on and so forth on the downside, if and when it starts to move. So that's where I'm at right now on the buy side. Like I said, maybe somewhere 42.90, somewhere 42.80. That's more of my interest level for potentially getting long. Again, what that does is that takes back a lot of this poor structure. It brings the market back. It gets rid of all these late buyers up here, all these Momo buyers, and invites potentially a stronger, bid into the market to continue the next leg up. So that's where I'm at with the ES today. I think the ES would be tradable today. I think there's going to be some opportunity there. Taking a look at old RTY here. So I'd like to start with the daily on RTY. Why? Because RTY is super mechanical in nature. Now, we talked yesterday and the day prior about what this was, right? We talked about this balance range. And I mean, the reason we talk about this each and every day is because when it starts to work and starts to happen, nobody can sit back here and say, oh, it's easy to say that now, right? Of course, it's easy for me to say, oh, they look below balance here and they're above. Well, that's great, but we talked about it prior, right? We talked about this being the opportune moment. So RTY is now broken back into this balance range. Not surprising. Not a piece of me is surprised. What happens from here will set up the next play, right? So I talked about yesterday, the 2200 number is an area I'm interested in potentially starting into a short trade. And what that short trade is looking for is not just potentially making a new low and breaking out to the downside of this balance range, but possibly, a worst case scenario, getting to move back towards 2160, at which point we can monitor to see if kind of something like this happens, right? It's happened here. It's happened here where the market has looked below this level. It's rallied back up to its averages. It's come back to the balance area low, found support, and then the next move happened, right? Looked above, back to the averages, pulled back into support, and then the next move happened, okay? That's very common in a balance range, so that's what I will be looking for today to see if that pullback is going to happen. And from that pullback, I'll be able to make a better decision on, either exiting or reversing a short trade. Now, don't get me wrong, this could just rally and that could just, bad news, bad bears, but it is what it is, right? You got to take opportunity, you got to take your shot and take around your plan as needed. So as I'm opening up my profiles for RTY, now, this is a pretty strong resistance level, right? This is why I talked about, just above the 22 level, that 2200 level as being an area of interest to me. It's an area where the market likes to pause and then, potentially change directions. We had it prior to our sell-off. We've now come back up to it, very similar to the level we just showed you on ES as being a very strong, either continue higher or continue lower level. And what RTY has done, in the GlobeX session is the same thing all the markets have done, which was this early rally here in the London session, and it's found a little bit of pause. Now, it's not breaking back down quite as hard as the other markets, but it's something to watch. If RTY can open somewhere below here, 2194, 2192, 2196, somewhere in there, and early opens and rallies into this range, 2202 to 2210, and fails, again, same opportunity is setting itself up. a potential short against the Globex high. It's guaranteed risk. Risk is predefined. Get in, get out if it doesn't work. Now, what's the opposite to that? If they break above it, any pullback towards this level is buyable, again, based off of where this pullback goes into or based off of yesterday's high. R2I itself is set up, the potential for a firecracker on the downside. You can see it here with the DEHI, CDGHIJK lows, a bunch of lows starting to get grouped together. If they do get into that, that should cause, a more aggressive move to the downside. Now, that's on the downside. I'm not sure I'm looking for a long trade anywhere unless it's above 22.10. If it gets above 22.10, pulls back into it, I'm very interested to get long. I'm not really interested in buying the market below that 2200 number. That's where I'm at with R2Y this morning. Now let's jump to NQ. Is NQ surprising? Are we all surprised? No, not at all, right? We talked about this again, just like we talked about it in R2Y, talked about it in the ES. When the market pulls into this trend line, I'm not a trend line trader. I've said this 1,000 times. I continue to say it. I am not a trend line trader, but this trend line is the strongest trend line I've ever seen on an overall market as far as its reaction. Now, why I say I'm not a trend line trader is how many trend line traders buy, sell, buy, sell, buy, sell right off the trend, right? I'm not like that, but I am able to respect what this market has done. And this market has simply brought in this purple trend line, which goes back forever. We've shown it before on webinars, and found a buyer each and every time. It comes into there, finds a buyer, came up to there, multiple times and found a seller here, found a seller here, found a seller here. And all this was a natural move. It broke back underneath the upper channel, came down to this trend line, found a bid, and now we're back up at the top of the channel. Now, what I think makes that interesting to me is where where NQ is right now. Let me just square these off a little bit. So, I've had this level here, this 56.72 level for quite some time now. It's been a very good level for me as far as, there's reactions in the level. Keep in mind, all these levels are not buy sell levels. And it's very important to understand that I'm an observer of the market. I use the order flow around these levels to enter or exit the market based off of what's taking place. But what this does for me is it gives me an idea on where the market likes to see change, where the market is okay with changing, whether it's, pausing and reversing or pausing and ramping, something like that. It's an area where you can expect to see change. So as the market's coming down here, what did you get yesterday? Okay. If you were to erase D period from yesterday's profile, what'd you get, right? C period found resistance. Okay. D period found your temporary balance. E period found your support in that level. The rest is history. Okay. That's what I'm talking about, monitoring, observing for change. It's very, very powerful once you get, a strong understanding of how markets work in general. So same idea here, right? This is pulling back. This high, I already know, very questionable, poor high in NQ. Doesn't really happen that often. But this high up here is hitting that upper channel, right? Hitting that upper trend line. So as this is pulling back, where is it pulling back to? It's pulling back into an area where I expect there to be support. So I am not looking for a sell on NQ quite yet. If I am looking to sell NQ, what needs to happen is this needs to break down below. They can test the backstop here at 24. Keep in mind, if it tests and reverses off a backstop, you guys probably don't know this. I talked about this in the profile series all the time. You don't fade into a backstop. You just don't do it. It is a poor decision to make. You want to see these levels go and then the reversal, to fade into it and then get the continuation. So if I am looking to sell NQ, I need to break below not just this level. I need to aggressively get below this 24 level, and then I'm willing to start selling the pops. Likewise, I think today in NQ, as long as this level holds and as long as this backstop holds, I want to be looking long side. Again, we're running into tech earnings, right? NQ is a tech heavy market or index. You have the big boys in there. So it's something you want to pay attention to as being potentially, maybe a little more long bias to balance values. I don't really see a great trading opportunity setting up in NQ. And the only reason for that is I think, based off of how R2Y trades early and based off of how the ES trades early, that's kind of what's going to give me the most confidence. Now, boom, bada bing, we're going to have a little extra today, a little extra chart today for you. This is the Dow. All right, I do trade the Dow, just like everything. If it trades, I'll trade it. These are certain levels that I've had built on the Dow. And I'm still getting used to how it trades. but the levels themselves are starting to come in pretty well. You're starting to see how they're really starting to work out. They're very, very mechanical in nature. The Dow's a great market, man. Once you get a hold of it, the Dow is a great market. But these are really strong structural levels. So just to give you an idea, maybe you're a trader of the Dow, maybe you're interested in watching it. I started watching it because it gives you great information in regards to the potential of why ES is doing this. I think ES follows the Dow a lot, kind of like what it used to do with NQ, prior to March, really getting carried away. So I think the Dow is setting up some great opportunities on both sides. I think it is the most tradable market today. And why I say that is if the Dow comes into here, the 560 area, so on and so forth, you have an opportunity to build into a short trade. If the Dow comes down into here, the 360, 440, 400 area, you have an opportunity to build a long trade. It's kind of stuck between two strong reference levels. Now, I don't know if I'm going to trade the Dow today, but I do think the Dow is very tradable today. I think I'm going to just use it as kind of what I do, as being, a gauge on why the ES is doing something, why the RTY is doing something, so on and so forth, just to give you another piece of information each and every day of the market so that I can effectively navigate it. So that's kind of where I'm at for today. I've got to go get another coffee in me. This backside of this vaccine is annoying. So that being said, we went a little bit longer today, but there's a lot more to talk about. Hope you guys trade well, trade safe, and we'll see you again tomorrow.